Hey you guys, how's it going? My name's Jeff. Welcome to the channel, and if you've been here before, it's great to have you back. Today, I just want to encourage you guys, no matter where you are in your investing journeys, to just keep at it and be consistent. It's a lot like exercise and working out and getting healthy. You're not going to get great results going to the gym once, and it just takes that repetition. Investing's like that, and there are going to be a lot of gray days like today. I think it's a great time to do a little video here. It's raining out, it's windy, and it's gray, and there's nobody at the beach. But with investing, it's like that a lot. You get these bleak stretches of time. I think we're in one right now. You know, here we are. There's a lot of uncertainty in the markets, and stocks have been going down. So people are afraid to invest, and you know, for a long-term investor, you want to participate and buy when the stock market's down. And you know, I invest every month at the start of the month. The first of the month, I buy shares. This year, I've been investing in ETFs, 5 different ETFs on the first of every month. And you know, I haven't seen the prices go up much because, except for a few really hot and large tech stocks, the growth stocks, the market's not being pushed forward by the overall economy, you know, all of the stocks in the market. It's just concentrated in a few. But the point of this video is to tell you, you know, I saw a comment under a video here on YouTube, and somebody was commenting that 28 years old is already kind of late to get started. And they were encouraging this person to do this or that with their investments. And I just think, you know, first of all, telling somebody that it's too late to get started at 28 seems ridiculous to me, because yes, ideally you would start investing at maybe 22 or 23 or even earlier, because time is on the side of the investor who starts early. But if you're 38, if you're 45, it's not too late to invest. People are living longer than ever before, and you need a long, you know, time horizon. So if you're 35 or 45, you're going to live 20, 30, 40 years. That's enough time for the market to work in your favor. So anyways, I just wanted to share that with you because it just seems so crazy that someone would be shamed for waiting until 28 years old to start investing. You have plenty of time at 28. And even though it might feel like you're late to the party, you're not. And I just want to encourage people. I remember what it's like to be young and feel like a little bit confused with all the choices in what to buy, when to invest, how much to invest, all that. And of course, I can't tell you that. I'd never want to give advice to anyone, especially somebody who I don't know, whose situation I don't know. But as kind of helpful education and just teaching you something, I can tell you that in my own case, I did start in my 20s, but I was just investing a small amount. In fact, my first investments, you had to have $1,000 to start back in the day because we didn't have ETFs, and mutual funds had high minimum initial investments, usually like $3,000 or $2,500. But I found a mutual fund that was only $1,000 to get started, which was really cheap at that time. And I remember that first $1,000 investment to me just seemed like such a huge gamble, like such a huge risk. I didn't really understand investing. I just knew it would be good for me. So anyways, I just want to share that with you, that I know what that's like to be starting out. But it doesn't matter. You're not too old. I mean, I would say, of course, it doesn't make a lot of sense if you're maybe 85 or 95 and you're thinking about investing in stocks. There's a lot of uncertainty then because markets can go down and stay down for a while. But I imagine most people, by the time they're in their 80s or 90s, are not thinking, hey, I'd like to start investing in stocks. So, you know, anyways, just wanted to share that with you. And it's all about your attitude. It's all about keeping that long range mindset and having the right temperament. And the temperament I think that fits best is just staying calm, really, because if you freak out, you'll tend to sell when markets are down, and then when the markets go up, you get excited because everyone else is excited. So of course you wind up paying really high prices. So anyways, I'm glad you're watching this. Hope that your investing learning is going well. If you have any questions, put them in the comments. I love to respond to any kind of questions people have, little give and take. And if you're new to the channel and have not yet subscribed, please click the subscribe button and then just type in the comment section, I subscribed, because I like to hear about it when you guys join the channel. It's great to have you with me, and I look forward to seeing you in the next video.